Welcome to the stock analysis of Shilchar Technologies Ltd. Today, we're diving deep into this leading player in the power and distribution transformers. We'll cover their industry outlook, business segments, financials, management outlook, future Capex plan and key strengths and weaknesses. Click the info button to explore our analysis of other stocks in the power industry. Ready to learn more? Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of Shilchar Technologies Ltd. Shilchar Technologies Ltd., established in 1986, is a leading Indian manufacturer of electronics and telecom and power and distribution transformers. The company entered the R-core transformers segment in 1990 and, following strong market demand, began producing ferrite transformers in 1995. The company has expanded its operations to include the manufacturing of power and distribution transformers between 2004 to 2007. Today, the company serves a wide range of industries, including utilities, the renewable energy sector, and retail customers worldwide. Now, let's look at the transformer industry. Transformers industry in India is growing due to government initiatives for grid infrastructure upgrades, the rapid growth of renewable energy, especially solar, and increased capital expenditure in sectors like steel, cement, and green energy are driving strong transformer demand and market growth. Transformer demand in India is rising due to the surge in solar capacity, from 15 gigawatts to 50 gigawatts annually, and Power Grid Corporation of India's plans to double investments in grid modernization. Global supply shortages are boosting export opportunities for Indian transformer manufacturers, with aging infrastructure and renewable energy growth driving continued market growth. Let's delve into their product portfolio. First, power transformer. Shilchar Technologies has been manufacturing power transformers since 2007. With a modern facility launched in April 2020, it now produces transformers from 5 MV amperes to 50 MV amperes, up to 132 kV, with an annual capacity of 4000 MV amperes. Second, distribution transformer. The company has been manufacturing distribution transformers since 2004 and has expanded its capacity to manufacture transformers ranging from 100 kV amperes to 5 MV amperes with voltage ratings up to 33 kV. Third, renewable energy transformers. Shilchar Technologies developed inverter duty transformers for solar in 2011, supplying 4 gigawatts globally. It has delivered 3.5 gigawatts of windmill transformers since 2006 and over 100 megawatts for hydro projects by March 2020. Fourth, furnace transformer. It steps down high voltage to a safer level, powering furnace components like the thermostat and ignition system. It's essential for electric furnaces used in industries like cement and mining, where high current is needed. Let's now break down the geographical revenue of Shilchar Technologies Ltd of financial year 24. The company's export revenue has increased from 24% in financial year 20 to 52% in financial year 24. While its domestic revenue has changed from 76% in financial year 20 to 48% in financial year 24. Now, let's look at the management of Shilchar Technologies Ltd. Mr. Ali Shah, aged 58 years, is son of late Shri Jitendra Shah, the chairman and founder director of the company. He has been associated with the company as one of the promoter directors since its incorporation. He is a Bachelor of Science with specialization in electronics and possesses more than 32 years of experience in the various areas of business including production, finance, marketing and administration. Mr. Ashay Shah is son of Mr. Ali J. Shah, promoter and managing director of the company. Mr. Ashay Shah has done Bachelor of Science in Electrical Engineering from University of Illinois, Urbana-Champaign, USA and done Masters in Business Administration from Cass Business School, London, UK. Mr. Ashay Shah served the company as Manager Operations from January 2014 to August 2016. Let's now look at the shareholding pattern of Shilchar Technologies Ltd as of September 2024. Promoters hold the majority share with 64.01%. Foreign institutional investors hold 3.22%. Mutual funds collectively hold 0.03%. Other institutions own 0.53% of the company. Public hold 32.21%. Now, let's delve into Shilchar Technologies Ltd's cost structure as a percentage of net sales for financial year 2024. The raw materials expenses accounts for 64.61% of net sales. Employee cost make up 3.58% of net sales. Power and fuel cost make up 0.26% of net sales. Selling and admin expenses cost make up 0.80% of net sales. Other manufacturing expenses make up 3.10% of net sales. At last, other expenses accounts for 0.72% of net sales. Let's now review of Shilchar Technologies Limited's financial performance over the years. Net sales have shown robust growth, increasing from 105.87 crore rupees in financial year 2015 to 396.88 crore rupees in financial year 2024, reflecting a CAGR of 14.13%. Profit after tax has also demonstrated significant growth, rising from 6 crore rupees in financial year 2015 to 92 crore rupees in financial year 2024, with a CAGR of 31.82%. Return on equity has increased from 19.6% in financial year 2015 to 43.8% in financial year 2024, highlighting the company's improved efficiency. Let's now turn to the management commentaries to get a better understanding of the company's performance. First, India power sector. India's electricity demand increased by 7.4% to 1,626 billion units, with peak demand reaching a record 243 gigawatts in September 2023. The rise in demand prompted coal blending and full capacity operation of coal facilities, along with new thermal capacities to resolve shortfalls. The electric vehicle sector saw remarkable growth in 2023, with sales exceeding 1.5 million units, a 49% increase. Additionally, the government's approval of the PM Electric Buses Seva program seeks to deploy 10,000 electric buses nationwide, bolstering transportation electrification. Second, renewable energy sector. In financial year 24, India's renewable energy capacity grew from 22%, 78 gigawatts, in financial year 19 to 33%, 144 gigawatts, and its share in electricity generation increased from 9% to 13%. In 2023, India auctioned 22.9 gigawatts of renewable capacity, driven by growth in solar and complex bids. India's push for net zero by 2070 has increased the need for energy storage, leading to more progress in pumped storage plants and battery energy storage solutions, with greater involvement from states and private players. Let's see the Concall highlights of Shilchar Technologies Ltd. India's power consumption is set to grow substantially, with peak electricity demand projected to exceed 270 gigawatts by 2026 and surpass 500 gigawatts by 2035. The company aims to achieve a revenue of 550 crore rupees in financial year 24 to 25, with plans to fully utilize its new capacity by financial year 26. There are challenges with importing cold-rolled grain-oriented laminations due to the need for Bureau of Indian Standards approvals, but the material is still available, and the company is not having any sourcing problems. Onboarding and training new talent to meet the operational requirements of the expanded capacity. Now let's the Capex plan of Shilchar Technologies Ltd. The company increased its production capacity from 4,000 megavolt amperes to 7,500 megavolt amperes in August 2024, driving strong growth in Q2 and positioning itself to meet rising market demand. It plans to fully utilize this capacity in financial year 25, targeting a turnover of 750 rupees 800 crores for financial year 26. A large land parcel at Gavasad, with two-thirds reserved for future expansion, provides significant long-term growth potential, allowing for quick brownfield capacity expansion to meet industry needs. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Established track record of operations. Shilchar Technologies Ltd, with 20+ years of experience, leads India's renewable energy sector and exports to regions like the USA, Canada, and the Middle East. It manufactures transformers from 5 kV amperes to 50,000 kV amperes, with 60% revenue from power and energy. ISO 9001 to 2015 and Bureau of Indian Standards certified, the company is expanding into steel and cement industries. Experienced promoters. The company is led by Ali Shah, with 30 years of experience, supported by his sons, Ashay and Atman Shah, and a skilled team of professionals with over a decade of experience. Second, weaknesses. Raw material volatility and forex fluctuation risk. Shilchar Technologies Limited's main raw materials, copper, transformer oil, cold-rolled grain-oriented steel, and aluminium, account for 80 to 85% of costs, with price volatility due to global demand and forex fluctuations. The company mitigates this by purchasing materials on order and reported a foreign exchange gain of 2.64 crore rupees in financial year 24, slightly lower than 2.81 crore rupees in financial year 23. In financial year 24, 50% of revenue came from exports, with minimal direct imports. Liquidity. Shilchar Technologies Ltd has strong liquidity but relies heavily on non-fund-based working capital, with 88% utilization in financial year 24. Its operating cycle improved to 79 days, though receivables management remains a focus. The lack of long-term debt obligations may limit growth opportunities through debt financing. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.